Hello everyone. So we have concluded the last module, that is module 8, post filing corrections and refunds. So welcome to this Q&A session of the final module. So let us begin with the Q&A session. First question: a registered business realizes that they made a typographical error in the recipient's GSTIN for a B2B invoice while filing of GSTR 1 return. Can they correct this mistake and what is the process? So yes, the business can correct this mistake. GSTR1 has multiple columns for amendment of different fields of GSTR1 return. So GSTR1 allows for amendments in subsequent filing periods. The business need to log into the GST portal, navigate to the return dashboard and select the relevant tax period for which the return is to be filed. After selecting the relevant period, the SSE has to access the amendment of GSTR 1 section, under which he will find multiple amendment options. They would then select the B2B amendments, and afterwards he has to locate the incorrect invoice using the original details and modify the GSTIN to the correct one. After saving and verifying the changes, they submit the amended GSTR 1. This amendment will reflect in the recipient's GSTR 2A or 2B in a later period. So, this type of amendments is allowed only once. So, an incorrect GSTIN can be corrected only once and not multiple times. Moving ahead, a taxpayer accidentally claimed excess input tax credit in the GSTR 3B for a particular month. How can this error be rectified and what are the associated implications? So, direct amendment in GSTR 3B is not possible. So, any amendments or any rectifications in the data of GSTR 3B can be done in the subsequent period only. So, if excess input tax credit is claimed in GSTR 3B, the taxpayer needs to reverse the excess amount in a subsequent GSTR 3B filings. This involves declaring the reversal of such ITC in the relevant table of GSTR 3B. The implication includes potential interest liability if excess ITC was utilized as interest at the rate of 18% per annum is applicable on the amount of excess ITC utilized. The reversal ensures that the correct ITC balance is maintained and avoids further scrutiny. So, in case excessive input tax credit has been claimed in a particular month, then the SSE is required to reverse the same in the subsequent month's GSTR 3B return. So, under the input tax credit table of the GSTR 3B return, there is a specific column for ITC reversal. So, the SSE has to reverse this ITC excessively claimed in the prior period return in that column, and if such input tax credit was utilized in that return for the payment of taxes, then interest at the rate of 18% should be paid along with the reversal of input tax credit. If such input was not utilized at the time of availment of such input tax credit for the payment of tax, then in such a case interest is not required to be paid. So moving ahead, what are the key categories under which a registered taxpayer can claim a refund under GST? Provide an example for each category. So registered taxpayers can claim refund under various categories, which includes excess payment of tax. So when a taxpayer inadvertently pays more tax than due, example due to data entry or error or miscalculations. In such a case, the taxpayer can claim refund of such excessively paid taxes through a refund application. Then zero rated supplies in case of exports and supplies to special economic zones. So GST paid on inputs or services used in making zero rated supplies without payment of tax under LUT, that is letter of undertaking or bond, or IGST paid on export of goods or services with tax payment. For example, an exporter claims a refund of IGST paid on goods exported. So, if an exporter has not taken letter of undertaking or has not opted for LUT and has paid the GST upfront at the time of export, then he can claim the refund of the same amount of GST paid on such exports. In case LUT has been opted for by the taxpayer or by the exporter, then in such a case, the inputs that are used exclusively for the export and taxes against such inputs can be claimed for refund. Then input tax credit accumulation due to inverted duty structure. When the tax rate on inputs is higher than the tax rate on output supplies, leading to accumulation of input tax credit. For example, a manufacturer whose raw material attracts 18% GST while the finished product is taxed at 12%. In such a case, there will be huge accumulation of input tax credit on account of purchases of higher slab rate goods. In such a case also, the taxpayer can claim for refund. Then supplies to SEZ units or developers. Taxes paid on supplies made to SEZ units or developers also falls under zero rated supplies and refunds can be claimed for the same. Then refund to recipient of deemed export. Specific categories of transaction treated as deemed export even though goods doesn't leave the country where the recipient can claim the refund. In such case also the recipient can claim the refund of input tax credits. Also, if a business closes down and some cash balance is appearing in the cash ledger on the GST portal of the taxpayer, he can claim for the refund of the same. Moving ahead, what is the statutory timeline for filing a GST refund application and what is considered the relevant date for calculating this limit in different scenarios? So, GST refund application must be filed within 2 years from the relevant date as specified under section 54 of the CGST Act. The relevant date varies depending on the refund type. So, in case of excess payment of tax, the relevant date is the date of payment. So, 2 years should be counted from the date of payment. In case of export or deemed export, date of dispatch or loading or passing the frontier. In such a case, the relevant date will be the date of dispatch or loading or passing the frontier. Then ITC accumulation, that is in case of zero rated supplies or inverted duty structure, the last date of the financial year to which the credit belongs, that is 31st March of the relevant financial year. Then finalization of provisional assessment, date of tax adjustment. If some provisional assessment is going on and it has been finalized, then the date of such tax adjustment shall be the relevant date. So failure to file within this specified time limit can result in the refund claim being barred by limitation. So it is very important to keep a track on the relevant date for claiming the refund against the different type of accumulations. Next, what is a provisional refund? Under what circumstances can it be claimed and what is the processing timeline for such refunds? So a provisional refund is a partial refund granted quickly to specific categories of taxpayers, primarily exporters making zero rated supplies without payment of tax under LUT or bond or to SEZ units or developers. It is granted to improve liquidity and ease of working capital pressure. So provisional refunds of 90% of the claimed amount is granted within 7 days from the date of acknowledgement of the complete application in form RFD 02. The remaining 10% is processed and refunded after the final verification and scrutiny of application, usually within the overall 60-day timeline for refund processing. So the entire refund is not granted immediately after filing of the refund application, but only 90% of such refund amount is released within 7 days of the processing of the application, and the remaining 10% of the refund amount is released after the proper verification of the refund application. So a provisional refund is a partial refund against the claimed refund amount. Next, list 5 common reasons for rejection of GST refund claimed by the tax authorities. List 5 common reasons for the rejection of GST refunds claims by the tax authorities. So, common reasons for rejecting GST refund claims include mismatch between the claims and GSTR 2B. So, if the refund application does not match with GSTR 2B, or if any excessive refund is claimed which is not appearing in the relevant period's GSTR 2B, then such application is liable to be rejected by the GST department. Then supplier failing to pay tax to the government. The supplier of goods or services against whose invoices the input tax credit has been claimed has failed to pay the taxes collected from the recipient of goods or services, then in such a case the input tax credit cannot be granted to the recipient of goods or services. Then incomplete or incorrect documentation, example missing invoice statements. So the first and foremost condition to claim input tax credit is the possession of valid tax invoice. So if the tax invoice or other statements are not in possession, then input tax credit can be denied and refund application may be subject to rejection. Then failure to satisfy the unjust enrichment test for claims over 2 lakh without CA certificate. So in case any refund is claimed whose value exceeds rupees 2 lakh, a CA certificate is required. If the application is not supported with a CA certificate, then the refund application is liable to be rejected by the authorities. Then filing the application after the 2-year deadline, that is, if the refund application gets time barred, then it cannot be processed by the GST department. Then claiming input tax credit on blocked goods or services under section 75. So if any refund application has been made in which the refund claimed falls under the blocked credits, that is covered under section 17 subsection 5, then such applications are also liable to be rejected by the GST authorities. So moving ahead to the next question, a business wishes to claim a refund for accumulated input tax credit due to zero rated supplies made without payment of tax, that is under LUT, letter of undertaking. Outline the step-by-step process for filing this refund application on the GST portal, including necessary forms and documentation. So to claim a refund for accumulated input tax credit on zero rated supplies without tax payment includes the following steps. Ensure accurate GSTR 1 and GSTR 3B filing for the period declaring exports under LUT. So the turnover against such export must be reported in the relevant column of the GSTR 1 return, and it must be reported as an export. Then log into the GST portal and navigate to services. Under services, refund. Under refund option, there is an option to apply for refund, that is application for refund. So select refund of unutilized input tax credit on account of export of goods or services without payment of tax, that is accumulated input tax credit. So the taxpayer has to choose this option. Then download statement 3, fill in export invoice details, upload the JSON and enter the turnover and ITC details in the computation of refund. So the entire detail is required to be filled up in the statement 3 and in computation of refund. Only those invoices which are exclusively used for executing the exports shall be allowed to take the refund for. Then provide bank details for the refund credit. the refund will be credited in the designated bank account furnished by the taxpayer. Then upload supporting documents like export invoices, LUT or bond reference, then FIRC and BRC for services. What is FIRC and BRC? So FIRC is the foreign inward remittance certificate and BRC is the bank realization certificate. These are issued by the banks against the foreign currency remittances. Then review and submit the application using DSC or EBC. So the application must be submitted properly so that it can be processed by the department. Track the refund status using the ARN on the portal. Regular follow-ups of the refund application by tracking it on the GST portal is necessary, as it may so happen that the intimation may not be received in the mail or it may be received in the spams of the mail. So a regular tracking is a must. Then moving ahead to next question, a business realizes they inadvertently reported a sale invoice twice in GSTR 1, leading to an over reporting of turnover. How can they correct this error and what is the impact of this in the GSTR 3B liability? So in this given example or in this given question, this scenario is not possible in case of B2B invoices, as once we have entered an invoice detail in the B2B segment, then once again if we try to fill up the same invoice detail, then the system will prompt that this invoice has already been added. So it may so happen that a B2C invoices, since invoice details are not required in case of B2C supplies, so it may be possible that a B2C invoice can be included twice in the return and lead to over reporting of turnover. So to correct a duplicate invoice in GSTR 1, the business needs to file an amendments in the subsequent months GSTR 1 return to reduce the value of duplicated invoice. The over reported liability will be adjusted in the GSTR 3B of the month the amendment is reported. So next question, what is a provisional refund? Under what circumstances can it be claimed and what is the processing time for such refunds? So a provisional refund is a quick or partial refund wherein 90% of the claimed amount is granted within 7 days of acknowledgement, primarily to exporters making zero rated supplies without tax payment under LUT or bond to improve the liquidity. The remaining 10% is processed after the final verification within the overall 60-day time limit. Provisional refunds are not given to the suppliers with a history of serious tax evasion or prosecution. So I guess we have already covered this question in question number 5. So let us move ahead. A taxpayer had to pay IGST instead of CGST and SGST on a supply due to an incorrect interpretation of place of supply rules. They later correctly paid the CGST and SGST amount. Can they claim a refund for the IGST wrongly paid and is interest applicable for this type of refund? So yes, the taxpayer can claim a refund for the IGST wrongly paid. According to section 77 of the CGST Act and section 19 of the IGST Act, read with rule 89(1)(a) of the CGST rules, if taxpayer treats an intrastate supply as an interstate or vice versa and pays the wrong tax IGST instead of CGST plus SGST, they can claim a refund for the tax wrongly paid after paying the correct tax amount. Importantly, no interest is charged on the payment of the correct tax in this situation, and the refund claimed for the wrong taxes paid is not subject to the unjust enrichment test. So yes, in case of wrong payment of taxes, that is payment of taxes under the wrong heads does not amount to unjust enrichment, and the taxpayer can claim the refund of such payments after paying the correct tax amount under the correct head of taxes. Next, what is the deadline for making amendments to GSTR 1 for errors discovered after filing? What happens if this deadline is missed? So, error in GSTR 1 can be amended by the earlier of November 30th of the following financial year or the filing of annual return for that financial year, whichever is earlier. Missing this deadline make the error permanent and can lead to penalties or issues, particularly affecting the recipient's input tax credits. So, this date must be kept in mind while amending any of the records. Then the last question, explain the doctrine of unjust enrichment in context of GST refunds. Under what conditions can a refund be directly paid to the applicant's bank account instead of being credited to the consumer welfare fund? So the doctrine of unjust enrichment prevents a person who has passed on the tax burden to others like customers from receiving a refund, as it would unjustify such refunds and it will unjustly enrich them. In such a case, the refund goes to the consumer welfare fund. A refund is paid directly to the applicant's bank account if they declare a self-declaration below rupees 2 lakh of refund application, or a CA or cost accounted certificate in case the refund application is for more than 2 lakh amount, that the tax incidence was not passed on. So, if the taxpayer furnishes a certificate from a chartered accountant that the incidence of tax has not been passed on, then he can claim the refund. Also, in case this amount does not exceed rupees 2 lakhs, he can give a self-declaration. This doctrine generally doesn't apply to refunds for accumulated ITC, exports, or taxes paid under the wrong head. So that's it for this module, and here we conclude the entire GST session. Hope the listeners will get benefited with these sessions. Thank you so much.